All right, everybody. So let's just review the market action and what happened and try to learn from it. So we know that S&P went down. Basically, just it had a break, it retested, and then just went into markdown. So we'll just take a look at how all of that happened. And you see that when the ES when it went into the resistance area, they would just sell heavy selling. I don't know, I think there's like 45,000. No, it's much more than that. So there's a lot of selling right here. And as you can see from these pullbacks, if we zoom in, we see that there's a lot of selling. See that? Red, 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 red. Look at the pullback demand. Nothing. See that? So you had the selling followed by nothing, selling followed by nothing, and then in the beginning of the day, not at the beginning of the day, but overnight, they just took it right back to an upthrust after distribution position, broke out and rejected the breakout right there in the red bar. That took it right back within the range. So this was overnight action at like 2:30 to 7:40, right? It just went up, pull back up. It's just doing a test and sometimes just setting up a fake out up here. How you know the change of behavior is in play is because it comes back strong as the market opens. See the red bars? A reversal right there. Breakdown, breakdown, breakdown. So even if you're unsure over here, you should be sure after all these break, 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 break. So on the prior day, it had a selling wave. Then, in the overnight, it gets really choppy and messy. But it's telling you it's done. All right. And then early morning does one more attempt at a high. This is some distribution back up there at the high. And then when the market opens, sell, 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 and rally down. If you don't get this, you just wait, and because the market's going to break down again. And then when it comes back, if you're bearish, you just wait for a red reversal bar. So, break into a rally. That means there is follow through after the break. Pulls back, reversal, take it. If you miss that, break, rally, pull back, here's the reversal. Break, pull back, reversal, but not a good idea to take it here. It's too low. And then there's a counter trend back up after this breakout to the upside. It does all that. You just have to wait for a rally back down. You break down, takes out this low, pulls back, break. There's the sell. Goes down, pull back. Rally, pull back, rally, pull back. There's the reversal. Rally, pull back, reversal. Of course, you don't take this one; it's too low, right? So rally, this not really interested in because it's breaking these highs, so it could change. But in this case, it was just the upthrust of that high, and the reversal bar worked. But in general, I don't want to see it take out the rally highs with the breakout. Give a break, pull back, does not close above. I think it did close above. So another little upthrust and a reversal bar, breakdown, rally, ding, 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 ding. And here it just flanned out. But in general, and this is what I'm going to talk about today, about breakouts, reversals, etc. So a couple of things that I'm going to talk about. Obviously, I don't want to get into breakouts too much because everybody knows what it is. The only thing you need to know about breakouts is they should have fall through. You already know what a breakout is. Whether it's breakout or breakdown, it's going to be a problem if there's no follow through. So generally what you have is this situation where you have a breakout, then it must have follow through. If it has follow through, right, then it'll become a rally. So rallies are breakouts above like the prior high here with follow through, and then that's a rally. What this means is that there's acceptance of higher prices. All right, when it has follow through, that means higher prices are being accepted. All right, after that, market will pull back. What are you looking for? You're looking for a reversal. So what happens is, just like a breakout is a big bar, when the prior highs are taken out, the breakout expands in terms of range. In terms of range from high to low, breakouts are bigger than the average bar. And if you examine them, in majority, as a principle, they always, almost always, I guess, but as a principle, they will have a bigger range. All right, so you can go check and you'll see that this is always the case, or almost always the case, where their range is quite large from high to low. And usually they'll also have the range will be bigger than the prior bar, and the volume will increase. Okay, so the characteristic of a breakout is the HLR, high-low range, is greater than the ATR. And then they have follow through and become a rally. This same characteristic is also true of reversals, meaning at resistance and support points, you have, just like here you had a, let me see this. It's a green bar. Just like you had a green bar here, right? The reversals from resistance typically have the same characteristics, such that their high-low range is greater than the ATR. So over here, you will get something like that. And then over here again, you get your reversal from a support point, and it will be big. Just will have the same characteristic. All right. So it's very important to note in reading a bar chart or a candle chart. There's, you need to know this. All right. Off of because in Wyckoff's method, there's a lot of emphasis on support and resistance. Any Wyckoff style trader, they'll have a lot of emphasis around behavior around support and resistance. So the behaviors around support and resistance are breakouts, breakouts, reversals, absorption, and fake outs, right? So you will see this behavior. It's built in the system. It's built within the market, that on the breakouts you have big bars, and on the reversals you have big bars. Now, when you're trading with trend, right, that's the other factor. Now, why is that a factor? Is because when you're trading with trend, the breakouts and the reversals, the amount of distance that come after them depends on trend. So amount of distance that comes after the breakout here depends on trend. The amount of distance that comes after the reversal here depends on trend. You will have counter trend for example, you have this. You will get breakouts here, but the amount of distance is small. And you get reversals. You get a reversal here, but the amount of distance is small. You have breakouts and reversals in both trend and counter trend direction, but the reversals and breakouts with trend will have a bigger move. All right, this is a very important point. All right. And now you're going to see that these two characteristics, that these two behaviors, breakouts and reversals, they happen all the time. So one of the ways you want to read a wave chart is just focus on the support and resistance points. See if they're going higher or lower. That'll tell you the trend. And then look at the behavior around them, which will be breakouts. And if they follow through, then it'll become a rally. And after that, it'll be a pullback. And after that, there'll be a reversal. That reversal will be the entry opportunity. Anyway, and it's also very important that when a reversal occurs, you must go to the lower time frame and examine it. The lower time frame will tell you what you need to know about the reversal. All right? Because without the lower time frames, you won't be able to gauge the true strength of the reversal, meaning in terms of volume, in terms of the background, in terms of whatever. Right? A higher time frame will only show you one bar. You don't know anything about that bar. Yes, you have range, and that is important, but its lower time frame will give you the details. One bar is not enough data, so you have to go to the lower time frame to examine its wave volume and background. All right, so today we covered breakouts and reversals, and the key point here is both of them have big range. They both have big range. Reversals offer entry opportunities on pullbacks, meaning when the market rallies and you don't want to buy the breakout, you wait for a pullback. That pullback will then offer a reversal. So you have, this is an entry opportunity, but it's not a great entry opportunity because of the risks involved. The risk is quite large, all the way up here at a prior high. Then you can consider on the pullbacks to look at the reversal, because the reversal will actually have lower risk. Okay? And not only that, but it'll probably give you a better entry, because typically reversals test the breakout or go deeper than the breakout. So that's why, you can choose to trade breakouts, you can choose to trade reversals. And that's it. All right, so where was I? All right, so I just showed the E-mini. Now we'll take a look at, gold. So gold is getting really interesting because at a higher time frame, it's at resistance level, and we had a breakdown right here. Look. So the market is done for the day. Obviously, this on the. But when it opens, I want to see how it behaves, because gold went to resistance. The selling that came in. Let's see how much. What is the ratio? It's 1.6 times the average down volume. So that wave here had 1.6 times the average down volume. And it took out 2 hourly support level, 2 hourly lows. Took out this low and this low. These green lines represent hourly lows, and those red lines at the top represent hourly highs. So I want to plot them because I want the hourlies to break. All right. So here, when it went to resistance, it broke these prior 2 hourly bars with a breakout. You see the breakout right there? Look at the expansion in range. That's what I just talked about. Look at the size. That's the biggest thrust, biggest range in 45 bars. Right there. 45 bars. Crack. Crack. That's 1.64 times the average range. Biggest in 45 bars. And biggest in 22 red bars. It's very significant. So I think, you know, the market, that's really good if you're trying to short, right? So now, since it's pulling back, we want to see the pullback and the reversal, and I'll give you the entry opportunity. All right, same shit over again. On the euro, I think it went to the overnight low, but I mean, the session ended. But you see here, goes down, has a breakout. Now it's in a downtrend, so I'm not too crazy about breakouts, but this downtrend looks like it's ending, because at this low, all of this buying came in. What's the ratio? This is 3.8 times. Holy shit, over 300% normal up volume. So there's a reversal occurring, no question. Someone's either short covering or buying and accumulating right here. Very nice. You have a breakout, you have a rally, you have a pullback, boom, that's the reversal, which is also your markup bar right there. Bingo. So if it was you know, if it was live, I would trade that. It's like a no-brainer. You know, everything's favorable for, you know, bulls have entered, and it took out the hourly high. You see this red? These hourly highs broke one, broke two. So very good. Very good. Anyway, was there, I think I went over gold and, oh yeah, and crude oil. So same thing over. If you understand the mechanics of the, you know, of these waves, it makes it much easier than trying to read candles and all these numbers, right? Like over here, look. You have hourly lows, low, 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 and breaking the highs and higher highs, higher lows, and then crack right there. Biggest, I can't tell the volume, but the size of the wave was the biggest in 31 waves. This wave is the biggest down wave in 31 waves. I don't know why it didn't show me a clean breakout. But, well, whatever. This one should have been... This is it. This is the breakdown. This bar. This bar. You see it expands right there. It's not that much bigger, but it's bigger than the prior 2 bars. So the range here is bigger than prior 2 bars, and it takes out that low. So it cracks, has follow through. All right. Now we just chill. We just wait for pullbacks. Those pullbacks need to affirm weakness in terms of less volume and less range, preferably smaller pullback 1, pullback 2, pullback 3. And there's your reversal red bar. Goodbye. That's it. You know, we're ready to go down. Right? So you have a breakout into a rally, pullback 1, pullback 2, retests the prior hour low, tries to get above it, rejects, mark down. Why? There's the reversal bar. And it goes down. And then it goes rally, pullback, but it's not really a good pullback. It's too low. Then you have your reversal bar, rally, pull back, there's your reversal bar. Here it seems like, because it hit a support level, that the buyers were coming in. That's why I have this change of behavior, because heavy volume, right? But it got sold off. So what does that mean? That means that someone covered a large position, right? And once they covered the large position, either whoever else just continued to sell it. So a lot of times you'll have a change of behavior, but if you don't have a pullback, low volume pullbacks, don't even think about it, because the low volume pullbacks would affirm that the change of behavior is not just covering, that it's done, that the selling here is done and buyers are back in control. If on the other hand you have a change of behavior or heavy sign of strength buying and it gets sold into, that means that this was just a temporary move, just a temporary bounce, and possibly just covering. So this red bar is where the sellers struck again, taking the market down. Now you have a rally, you have a pullback 1, pullback 2, bang, right there, red bar, sell. Take it out. It goes down, red bar, bang. Right? Now obviously I'm not too crazy, to take these shorts here, because it's barely any pullback. You want to see a rally, good pullback, and then a reversal. And that pullback must be weak. Like, I'm taking a look at the wave here. It's garbage. Look at this, no buying activity. So it keeps on doing that, and now we have to relax a little because the bulls are doing something. All right, so we just have to wait for the selling to resume. Selling resumes. Have a red bar, follow through, and that's it. Okay. Now we'll go to nat gas, crack gas. You have a rally. It's almost every time. Look at this. You have a rally, right? Down. Obviously, you're not going to look for trades up here. It's too high up. You want to get back into a good zone, good level. Goes down. This was a little too low, but there's your reversal. Rally. There's your reversal. Pull back. There's your reversal. There's more reversals. You have to have a clear understanding of the trend, the rally, right? Because the reversals and the breakouts, they will occur in both counter trend and trend. In this case, you have a little reversal here, the red one, but that's not what you're looking for. You're looking for greens. Why? Because they're rally. Rally, pullback, green reversal. Green reversal. Green reversal, breakout. Rally, pullback, and here it starts dying out. So that means don't mess with it. Ad itself is information, because you see that if these reversals are not working, the green reversals, the red, take a look at the red, the shorts, breakout to the downside, breakout to the downside into a rally. Oh, okay. So now we've switched direction, and the reason why these rallies are not working, the green reversals are not working, is because you had a resistance area, this hourly resistance right here. And there's a second level of resistance. So you're in that resistance zone. So obviously, what do you do at resistance? Look for shorts. So the rally occurs. Now we wait. Obviously, I'm not going to take a look here because I need some pullback, right? So wait for it, and you have to remember, you're going to get breakouts on both sides. All right, so it's just, you have to know what you're looking for in advance. This is why folks who just trade signals, there's no way it's just going to work. Because if you don't know what you're looking for in advance, you'll take both the bulls and the bearish signals, but the trend is down, so you have to only take the bearish signals. If the trend is up, you go for the bullish signals. So you have the rally. The rally is telling you I am going down. Pulls back. There's your reversal. And down we go. See, you have a breakout, no follow through in a downtrend, which means it's a fake out. And what are we looking for? In a downtrend, you are looking for a red reversal for entry on a pullback. Can this qualify as a rally and a pullback? Yes. Reversal, bang. Right? So as long as the rallies are to the downside, it means that the impulses are to the downside. Look for red reversal. Downside, look for red reversal. Downside, look for red reversal. If on the other hand, the rallies are to the upside, rally, pullback, reversal, green bar reversal, rally, pullback, green bar reversal, rally, pullback, green bar reversal not working. What's going on? Oh, we're at a resistance area. Rally, down rally, pullback, red bar reversal. I'll give you one more example. This is Bitcoin. Price went into a resistance area. All right, so first we'll just take a look at, as price is going higher. Here, this is a good one because it shows when it doesn't work. You had a breakdown, change in behavior, heavy, all of that, heavy selling pressure, but they kept buying it and turned it into a rally. So now once that happens, back off, because it means that the rally was bought, right? So you just chill out, rally, pull back, reversal, and the session then continues later on. Rally goes up, that's overbought, and now you have the down rallies from a level, from a resistance area. That's another important thing. You need to use some trade location. There's many different ways to do trade locations, but you need some form of trade location. Do not just take any signal, otherwise it'll be too random, and it has to be based on the higher time frames. So here you have a down rally. You have coming from resistance, down rally. Now what are we looking for? We know what we're looking for is a reversal. If we get breakouts, we do not take them because we're looking for down reversals. If we get green up reversal bars, we do not take them because they are counter trend. You're going to get very little distance, if any. So the rally tells us we're looking for down reversals. There you go, red reversal. Get another red rally. Here we have red reversal that doesn't work, so we just back off. Get a rally, and that rally failed, and the bears are back in control. Now you have, remember, as long as the rally is telling you to go long and short. So now I'm looking for red. Here you go, red reversals, rally, red reversal, rally, red reversals. Breakout, no follow through. If this breakout had follow through, it would be a different story, because it would probably then, try to test these areas here, right? So when you have breakouts, they need to be validated with follow through. Second, you have to see if the breakout, is it with trend or not. That'll tell you, because once again, I want to hammer this point. You have breakouts and reversals in both directions always. So you need to know from your own judgment which ones to trade. Okay. If the trend is down, you obviously just take the bearish ones. And here the trend is down. So what am I looking for? That red bar. Rally, red bar reversal, rally, red bar reversal. Keep going down, down, down. And here you have some change. What's the change? Because here you had breakout, and I'm still looking for red, but I see that it has follow through. So that's, what do they call it? Break of structure or something. So this is potential for change, right? Especially when there's the wave itself has volume, has the most volume in 14 up waves, and is the biggest wave in 6 waves, with the volume ratio very high. This is over 4 times the average volume of an up wave. So it's probably just short covering towards the end of the day. Okay. So I'm just going to do this one more time. Know that the way trends work, first of all, let's take a step back. We're looking at wave charts. Wave charts are highly effective for trading because of their focus. Their focus is on support and resistance. You have 2 points or 3 points, and they create a rally and pullback. Okay? As they create a rally and pullback, you are able to then identify breakouts at the location of prior highs. When a breakout has follow through, that's a very good sign because it becomes a rally. After that, if you're only when you're with trend, you look for a pullback that you need to consider is deep enough, and a reversal. So the two key things that wave charts help you, because of their focus on support and resistance, is to easily identify breakouts and reversals. Breakouts and reversals. Both are entry triggers. Both are entry triggers, right? So the second point you learned was that when you have a upsloping uptrend, there will be many times when you see this and you have a break down in an uptrend, but do not take it because it's a trap. And what you're going to get is a reversal back up. Then you have a breakdown and it's going to go back up. You have a breakdown all the time. You see these ABC patterns. Those ABC patterns almost always have breakdowns and breakouts, so don't take them. Why? Because they're against trend and they won't have a lot of distance. So only time they become important is when they have follow through and become an entire wave. All right? So here it's important. You see this is going down, down, down. Breakout, pullback, breakout, pullback, breakout, pullback. Breakdown, rally, breakdown, rally, breakdown, rally. But over here we have a breakout. This reversal down here pushed the market back to these resistance areas, broke out above those resistance areas, had follow through, turned into a rally, had a low volume pullback, and had a reversal. You see? So wave charts are really important because their focus is on support and resistance, and they can be used to gauge supply and demand as well as trend. If those support and resistance dots, points on a wave chart are moving up, it's uptrend. If they're moving down, it's a downtrend. And they show this the strength of the supply and demand. How? The distance between the support and resistance points will give you will quantify the strength of the wave. The key factor is distance, meaning from this low to that high, the distance from this low to that high is important. Because it's a big distance, it's telling you there is demand coming in. The second key factor is volume. The volume that came from the low to the high, the support to resistance, is quite large. So that's telling you that it's an expression of demand. And the final factor is time, the length, the time that the wave lasted. It's not a small wave. A small wave that's telling you that supply is in trouble is right here. You see this small down wave? That's a problem. See, these waves are now small. See this wave? It's very small. It's 1 to 2 bars. 1 to 2 bars, a couple of bars, but not a lot of distance. 1 to 2 bars. Just like a big wave is indicating strength, small wave is indicating weakness in supply and strength in demand. So all of this has to do with the wave chart and being able to read it, and it makes things simpler too, because it gives you a way of interpreting and reading markets, because you can use it to interpret supply and demand, trend, and support and resistance, and the behavior around support and resistance, the key ones being breakouts and reversals. All right, that's enough for today. Thank you. Have a good day. Bye.